Hey guys, Akil here. Want to pop in for a quick video. I'm going to be here on the dollar yen. We're dealing with a very interesting day in the market. We had some very, kind of a little bit shocking, I guess, news come out for the US this morning. And we have some pretty important news coming out over the next few days, right? We have our FOMC interest rate statement and monetary policy, all that fun stuff tomorrow. We have a non-farms on Friday. And then, of course, lurking in the background for the yen, we have the whole Bank of Japan intervention thing. So the dollar yen cross has been a very fundamentally driven pair recently, and we're matching that with a pretty technical sign. So you can see one of the most recent actions here on the dollar yen is that we had this massive candle spike up and retrace all the way down. Where did that retracement end at? Well, a previous zone that was tested before, right? You can see the candlestick right here, the wick, meaning that rejection zone at previous structure support. We came right back down to it. We tested again, got rejected, showing buying pressure, tested again, spiked through a little bit, showing more buying pressure, and did it a few more times before finally rallying up. So what happened today on the back of a little bit of dollar strength is that we finally cleared the double bottom level that existed here, right? Our double bottom is where we spike down here, we come down to retest. And then if I take a horizontal line right in here on the hourly, you're going to see that we violated that level with a breaking close above. Now, if you're new to how I teach trading and kind of the methods we use at Tier 1 Trading, we use a four-step process called IPDE: identify, predict, decide, execute. If you don't have a process, I recommend using one. It keeps you consistent in your analysis. And we all know the formula: consistent analysis plus consistent execution, that's the psychological side, equals consistent results. So the I, being able to identify a violation of previous structure resistance, a higher high, higher close, allows us to predict that price is likely to go higher. Then we have to decide how we want to get involved and then execute the trade, right? But sticking with the prediction side right here, if price is likely to go higher, then where is price likely to go higher to? And I would say a retest of our structure level right here, right? You can see our big elephant candle right there. Live room members, you know what I'm talking about. If you haven't been in the live room or seen my videos, you probably think I'm a weirdo, but elephant candles, big candles that stand out, supply demand zones, all that fun stuff. And what I'm doing is I'm taking the zone prior to that, so the consolidation zone with these two inside bars right here. And what you'll see is that gives me my prediction or my expectation of where price is likely to go to if we continue higher. And now I can set up the rest of my trade. I know that once we clear this level, we're likely to go higher. We're likely to go higher to this level. This area right here between 157.24 and 159 even, nice even handle number there, is the opportunity to look for longs. Now, the decide and execute part, that is on you. I can't help you with that. Well, I can help you with that, but that's where it comes down to the specifics of your strategy. Are you a breakout trader that enters right after the breakout? Do you wait for a pullback and a higher high, higher close? Do you need something else, right? These are going to be the rules of engagement that are specifically in your trading plan, and that is going to be different per each trader. But regardless of how you decide to get involved and eventually execute the trade, the analysis should be something that is consistent across the board. So looking for longs here on the dollar yen. Again, we have an FOMC statement tomorrow. Fed Chair Powell talking monetary policy, all of that fun stuff. The vibe has changed from like 6 interest rate cuts this year, which we thought was the case coming out of December, to maybe in the summer, to now probably not until September, if at all, this year. And the more we see that, the more we're going to see dollar strength. We've got yen weakness because, well, the yen likes to be weak. So the only thing you have to really watch out for is that Bank of Japan intervention. But I do think we're setting ourselves up on the right side of the market, obviously from a technical perspective, but from a fundamental perspective as well. And I hope I didn't jinx it. So hope you guys enjoyed the video. Do me a favor, hit that like button before you leave. If you have any questions or comments, leave them below. I do read each and every one, and I will respond. Good luck in the rest of your trading week. And until next time, plan your trade, trade your plan. Take care.